Hello folks, Brandon Chapman with you today. It's another Theo Night video for Monday, June 27th, 2022. And boy, we're about 2 days away to kicking off the most bullish period in the year for the last 20 years. So we'll kind of look at the market. We'll look at some news that are happening today regarding Bitcoin, Hood, for example, and several equities that are seeing, and in ETFs that are seeing some unusual option activity. Now, as you notice, the market, the ES has been rallying over the last week. Big up day on Friday, and then all of a sudden we kind of stall out today. The news of potential recession being received relatively positively. For example, if I go to the product depth here, we can bring up /ZQ. And what we're going to isolate here is this is looking at the prices for ZQ going out in time. So this is the price for the July contract, the August contract, and so forth. The big thing of note here, we have to look at it, right? You'll notice right here is a little bit of a potential for a September pause. Not much of a shift. A couple weeks ago, yeah, we were expecting much lower rates going into this year. But you'll notice a lot of uniformity. Then all of a sudden we hit November, and this thing just kind of flatlines here versus where we were maybe earlier last week, week before, of lower values. Lower values mean higher Fed funds rate. Last week, we saw this shift begin to happen in the expectations of what the Fed funds rate is going to be. This helped lead to a bit of a move in the market over the prior few days, accelerating on Friday. And in fact, I'm just going to bring up the SPY here, and I'll use the auto expected move. You know, for those that know, Don has his hand-drawn items for the SPX, but I'll use the auto expected move. Interesting thing here, right? There's Friday's close 2 weeks ago. We had the big move to the higher end, about 11-point range here. Friday's close carried us above the 2 times expected move level. And this is nosebleed territory. This is an area where you normally expect the market to come in. Notice, for example, in May, right? We had the breakout above the upper expected move. Then we had another big up day here, all closing greater than 2 times the expected move for that week. And then what happened? We went sideways for about a week, and then we drifted lower. Well, we actually sold off pretty heavily lower. The question is, are we going to have another one of these, right? We're in a bear market currently. Yeah, I realize the S&P is not down 20% today, but it was down 24% from the highs on June 17th. But we're down like 18 something right now. We're still in bear market territory, right? Something I've been calling out really since January, when things really began to turn in terms of ratios that I look at. And all of a sudden, we're kind of up and we're starting to pause today. Sorry, I'm going to remove my studies for a minute. So we're starting to pause today. Is this the beginning of a reversal? Well, starting on the 29th is the best 10-day, I guess we should say 10 trading days, or 2 weeks. So starting on the 29th is the best 10-day trading period of the year for the last 20 years. If you take the median return, it's 2.15%. Now, what's the median? It's the middle return, right? So take all the returns for 20 years. The middle return is 2.15%. Better than at any point throughout the year. So interesting, we're just about to enter this period, and all of a sudden we're met with a big move last week, pushing that return forward, and today we're seeing a pause. So the question is this a pause that refreshes the upside? It really looked as though last Wednesday was really resetting to the downside. And seeing what's going on today, it doesn't really change that dynamic a lot. However, looking at energy up nearly 3% today, XLE, finding support near the lows. And let me delete some of this stuff. From the lows from, for example, May 14th to April 25th. So this area has been a very significant point or significant area of support for XLE. We're testing and we're bouncing today. Looking at the S&P 100, Exxon, ConocoPhillips, you look at all these kind of energy names topping the list in the S&P 100 today. CVX is an example. Interestingly enough, we're not seeing a lot of movement, right? There's a lot of volume today. Notice how today's volume is really, for all intents and purposes, below average. We didn't really get that strong confirmation of volume coming in. We're really being dwarfed by the selling period on the 617 and 623. It doesn't mean that energy can't grind higher. So, for example, we look at the Strategic Petroleum Reserve. It's at the lowest level since 1986. What have they been releasing? Like 1 million barrels a day? Maybe making back some of what we were producing, pre-COVID levels versus what we're producing. They helping to kind of make up for that. But we're talking about very extreme low in terms of inventories. However, there is that possibility of demand destruction. Demand destruction will lower inventories or will actually potentially increase inventories or not cause any inventories to fall during a seasonally strong period for demand for oil as we're entering the summer driving season. Right now, refiners are operating at 10-year lows in terms of their capacity. There's the potential that demand may not be there and maybe oil starts to turn. But guess what? We're still dealing with other issues out there. And do we start to feel the Strategic Petroleum Reserve? Well, if we look at the product depth here and we look at it not for ZQ, we look at it for oil, what you're seeing is that oil is still in backwardation. And in fact, if we look at it from the orange line here on 6/17 to today, for example, the curve has actually only gotten steeper. So you look at that versus that, right? So we have an even steeper backwardation in oil, which still is representative of the expectations that inventories are going to be tight and continue to be tight in the future. And this is going to create positive pressure on oil. Now, the fact that we're seeing kind of recessionary forces, maybe it causes XLE to lag a little bit. But today is certainly a day where you're seeing some bullish activity come into energy specifically. And if we look at XLE, let's just bring up the 22 July expiration here. There was some bullish option activity. So let's bring it up here. 13,000 contracts is 78 and 10,000 contracts out here at 84.50. If we look at, for example, the time and sales, you'll see, for example, July 77.50, 80. Well, let's go take a look at that one. We're really prepared to look at that one. But 77.50 and 80, right? This is a roll down. They're selling the 80, buying the 77.50. So again, we're rolling down, expecting a bullish move in energy. And then right here, 22 July, that's your long call vertical, buying the 78, selling the 84.50. And if we go to 22nd July, let's look at the term structure or the skew. Again, we're buying 43, selling 39. Being that wide certainly is not as positive as you'd like. You might bring it in a little closer, maybe push out to 79 and 81. But the idea being is you can take that speculative out of the money trade with 25 days left for July 22nd, kind of looking for us to push towards the upper 70s to 80s. Well, guess what? That's about a 30% or 38% retracement of the downtrend. So the point being is there's some bullish activity today in energy looking at around 77.50 to 80 bucks. Would that be pie in the sky to see just a little bit of a run up here over the coming couple of weeks in energy? Heavens no. That's certainly within very reasonable proximity. And again, we're entering a seasonally bullish period for the market. Now again, does seasonality trump the bear market? Well, the reality is we're not just seeing a bear market. We're seeing conditions that are very oversold, and we achieved those oversold conditions back on the 13th. It's just taken us a while to get any traction, and then finally Friday, we finally broke out to the upside. So 2% from here, that doesn't mean a lot, right, in this volatile market that we're experiencing. But the point is there's some areas that might be inclined to rise, and certainly today, energy was one of those particular sectors that's looking relatively strong. And again, where do we see it? Do we see it with refiners like at MPC? Well, not if we're having destruction on demand and oil prices remain high. We're seeing it with Exxon, for example. Well, Exxon gives you that integrated exposure. That was the top performer in the S&P 100. We have some stocks that have traditionally had higher short interest, like Oxy, for example, or Rig, or today Tellurian, for example, is up about 7%. Again, don't expect this thing to go back and test prior highs. Maybe this thing could just push to 350, again, over a 10% return. So the point is that it's kind of picking your battles in this space. You could very readily go with a integrated name like Exxon or an ETF like XLE. And again, what are we looking for here? We're looking for this thing to maybe get about a 1/3 to 1/2 retracement on Exxon, which would carry to about 95 in this case. Again, maybe worth the trade, maybe like an in-out type spread. We're just looking for a vertical, looking for a short-term move higher here. But XLE does seem like a pretty reasonable setup, and this is where you're seeing the activity today. We may see it pick back up tomorrow. Now, certainly see it prices breaking through highs, volume, those things can help confirm it. Now, today, let's just look at Bitcoin. Let's circle around and look at some of the other markets here. So what is Bitcoin? You know, a lot of times I ask people with regards to gold /GC, is gold a commodity or currency? And the reality is it cannot be both at the same time, right? Money has no value other than as a medium of exchange or a store of value. But when we think about commodity or currency, there's also the government's treatment of that product. So for example, /Bitcoin. Is Bitcoin a commodity? Well, we know it's not a commodity, right? It's it's digital, right? You can't spread it out an atom thick and increase conductivity, you know, for inputs. But from the treatment of the government, right, whether it's the SEC or CFTC, we had Chairman Gensler today kind of reiterate a prior policy stance saying that Bitcoin for regulatory purposes is a commodity, which is actually favorable, right, in the way that it's defined. But he also happened to mention that not all cryptocurrency is a commodity. And that's definitely the case. As you look around the periphery of cryptocurrency, you see companies that are really more using crypto as a means to fund their business, to develop, you know, to as a funding mechanism, right? For example, Polygon. You know, Polygon takes Ether, and then their Matic cryptocurrency allows you to get out of Ether and do what? It allows you to trade their proof of stake network, and all of a sudden, you know, now you have more faster transactions, lower cost transactions, and then you convert your Matic back to Ether. Or if you want to stake your Matic, right? They're paying a percentage return. We'll see if they can keep maintaining that if all of a sudden some of the transactions start to diminish, which is likely to happen, right? It's not guaranteed. But here's the deal. What Gensler mentioned today is that some cryptocurrency is a security. And again, that's definitely the case. And I'm not sure people oftentimes really think of it that way, but a lot of cryptocurrency is really more of a company. You're looking to generate returns off of a business as opposed to something like Bitcoin, where it really is just what it is. It really is more like gold than anything else. You know, because again, is there an underlying business? Well, there's not even running Bitcoin. So as we think about this, you have the forks and all this, but the idea is that, look, I mean, Bitcoin is more money. So it's good to hear that case, right? That Bitcoin is a commodity, but the idea is that maybe the SEC starts to regulate other cryptocurrencies. So as we look at Coin, for example, Coinbase on the news was down about 10% today, which given how it's trading is not extraordinary, right? Riot actually had some call option activity today, but you know what? What's going to drive this thing? But one thing that's interesting is Hood, right? Robinhood Markets, they've dipped their toe into the cryptocurrency world, stock world, options, etc. They have a mobile platform. They're trying to beef up, you know, trying to beef up their expertise by hiring key people. This is a company that Don's been talking about. Don Kaufman, co-founder of TheoTrade, for a number of months as a possibility for a takeover target. And I believe the price level was south of 80. And so what's happening here is that, you know, we had a company step in, and they may have, you know, again, I don't think they're exploring it. I don't think they've come to any sort of terms yet, but it was halted today for a minute. But FTX is potentially stepping in and wanting to buy Hood. You know, I was chatting with Don in our Skype chat that we do, and he's saying, man, Coin really missed out. The point is that if we're going to start to wrap in a lot of these other tokens, for example, if they're going to be regulated by the SEC and treated more like equity, for example, again, would it have made more sense for Coin to step up and buy Hood? Maybe so. But again, you know, knowing Don's background here and understanding, hey, this thing starts to get too low, somebody's going to want to step in and buy it. So I thought it was really interesting today, the news from Hood. And again, we're going to see it vary based on a probability of something happening in the price. But we're just seeing initial kind of rumblings as far as, you know, the potential merger acquisition by FTX. So it's creating kind of a stir here today. And again, kind of dovetailing with some of what SEC Chairman Gensler said. And again, just overall the climate. We're talking about, inflation, but, is there signs that other things are breaking here? So we look at TNX. The Treasury bond market had a rather kind of ugly day. In fact, a bad auction on the 5-year, for example. Yields were up 0.83. You can look at TNX. Yields were 0.69. TYX. Yields were up 0.48. So what you saw is that the 5, 10, and 30 actually got closer together, right? The flattening of the yield curve, which is actually relatively bearish for financials and specifically banks. So banks and financials had a really good day on Friday. Today they gap up and boom, we're seeing these auctions. We're seeing rising Treasury yields and all of a sudden a flattening of the curve. And obviously we have the Fed's expectation of raising 75 basis points this month. And again, who knows where we're going to be at the end of the year and beginning of next year. But the point is that this structure is getting very unfavorable for financials. So the big rally on Friday may be leading to some selling and a near-term pullback here. So when you think about lenders, like lending institutions like U.S. Bank as an example, this could be a potential play. Certainly there are consumer financial companies like Capital One Financial Services, Discover Financial Services may create an opportunity. American Express. Anyway, we got these kind of consumer finance companies. They're certainly, the crosshairs are being drawn on these if defaults start to increase, if yields keep rising. But also, one of the better performing sectors over the last week was actually real estate. So we look at 1 week performance here. XLRE was up 6.6%, the fourth best performing area of the market over the last 3 weeks. 6 weeks, it's about flat in terms of its return. Point being is that yields started to come in. A lot of real estate companies began to do relatively well. You can look at XLRE rallying those prior 3 days. Now we're stalling out. Today in IYR is an example. Similar pattern. We're back up against prior support, now resistance. We get this long-legged spinning top today. You could look for a little bit of follow-through tomorrow below today's low. But specifically on IYR, this was a weekly option for 1 July. But 10,000 contracts, again, are they adding to it? Are they closing it out? A lot of activity today around that 90 strike in IYR. I think it is in addition to inventories put on last week. And again, 90s down here. Another kind of real estate companies, Redfin, RDFN. So again, got a nice rally. We're kind of testing some old resistance as new support here. Sorry, old support is now resistance. Maybe broke above it a little bit on Friday. Volume today wasn't really super high, but we start to take out this low. Do we start to open up the downside? And today, specifically in Redfin, it was out in January. 2,000 contracts traded here at the $3 strike price, aiming for some significant downside here in RDFN. And guess what they're doing? They're doing it at a point, again, news of layoffs, etc. They're doing it at a point right now where we just got a very, very significant and very improbable rally, and they're setting up some of these bearish trades here on some of these stocks. Now, another one, AGNC. I know this one we tried to ride a few times and done it for pretty good success. It looked like things were starting to turn bearish here last Wednesday, and then we just suddenly broke out. Now we're talking about an even higher level, a more significant area of prior support, now resistance, and even more elevated. And you look at the rally that occurred on declining volume as we're running up towards that high, and now we're at some prior resistance on AGNC today. It was an August expiration, so let's bring down August here. 10,900 contracts. You can see that 20,000 are built previously. We've got 10,000 more today in AGNC, looking for downside to $10 or less. $10 is here, right? So that gives you a short-term target, currently at 1150, targeting 10. Now, again, you could go out to August, but again, the skew is favorable to do a long put vertical, right? You could buy at an 11, sell at 10 here. 1 point spread, cost you maybe a little over 20 cents. But again, you got 80 cents of upside if we reach $10 by expiration here. You might take it a little bit before that, but you get the point. Also, we're talking about bearish areas. What about bullish areas? Again, energy. We're going to go back to BTU. So today we're seeing BTU catch a bid. This is coal. We're having coal-fired power plants starting to fire back up in Europe. Does coal demand start to pick up again? Well, maybe to about 30 on BTU. Maybe it stalls at a 27.50. Point being is we're establishing support, and we've been building this support the last couple of weeks, and we've tested a couple of other times over the last several months. So BTU today, a couple of trades actually, one for October in here. It's in the money and a little bit around the $20 strike price. And then let's look out at December as well. 3,000 contracts mostly bought at the 29 strike. And again, some of this is following up on bullish activity that was on, look at my paper here. I was going to say Friday, but I don't think it was. Oh well. There was some last week. I just can't find on my paper. I should wrote it down. But again, I believe there was some bullish activity last week on BTU. Continuing today. Now, another company that's involved in the metallurgical coal space, but they basically do everything, is TECK Resources. It's a weaker position. We did break support here at around 35. We're coming off a lower level. As you look at kind of the retracement here, could we get back to 36.50 or maybe 35.5? Maybe. Again, that's still a little over $2 in movement. What we saw today, or what's happening today in terms of unusual option activity, this was a weekly option. Buying at 3,033, selling the 36, buying 63% implied volatility and selling 68. That makes this spread cheaper. So it costs you maybe 70 cents ish, and it's a 250 spread, right? So significant return on risk, and we're looking at $36. We're basically getting back to prior levels. And again, if it happens this week, there's a huge payout here. Of course, you can extend your time frame if you want. You could try to go out to 18 days. The skew is not as favorable, which means you don't make quite as, it's not quite as cheap, and you don't make it as quickly. But if you want to extend your time frame, you can do that. But it looks like, again, TECK may getting back to prior support, now resistance at around 36. Another one on the bullish side is, we've got two more we'll talk about. Sabre. Sabre, there was some bullish activity on Friday with that volume. Stock's up another 3% today. This is kind of that entertainment space. I went to the Garth Brooks concert about a week and a half ago. An amazing concert, and it was packed, right? 2 nights in a row, sold out a 60,000 plus stadium. And do people want to get back out there? And again, as long as the money's there is some opportunity or some bullish inklings in that kind of travel space. Sabre Group, if you go to the Analyze tab here, it's a software and technology that connects travel buyers with the travel marketplace, right? So this is kind of that travel space. It's more on the technology side. But again, today, the trade on Sabre that was interesting was actually for an August expiration out here at the $8 strike price. So again, looking at some decent upside here, about $1.50, $8 gets you back to the prior high. Whoever said option traders don't look at price, I'm not sure that it appears that they do, right? Anyways, we're looking at $8 potentially as a near-term target, but I get it. Probabilities too, everything's kind of factored in. But again, sometimes you see this kind of setup where it's trading in line with prior price action. Finally, let's talk Nike. Nike is an interesting one. My kids, they love Jordans, love Jordan 1s, constantly scouring eBay, etc., trying to get drops. My son went to get some Jordan 1s on Nike. Ended up coming on hours after the drop happened, and they had inventory. Man, I've not seen that for a while. And so, of course, you look at Nike today, they're announcing after the market close. This is how I talked about in my session earlier today. We'll see if the activity is playing out in the direction the stock may be headed here. But a couple of bigger trades on this 1 July expiration here at the 105 and also the 100. As you look at the expected move here, the expected move is plus or minus $10 for this week, which is basically saying what? The stock may go down to either 120 or go down to 100. That's where a lot of activity was. We kind of talked about the idea of a butterfly or really maybe doing even just a bearish and outspread. So we have a chance to maybe kind of look at the after hours price here right now and see which way it's going. And right now we had the big pop and then the stock dropped, and so far it's done nothing. We got the conference call coming up. It's going to be really interesting to see what happens tomorrow. Nike, do we really just defy gravity and stick at around 110? Do we see the bulls really step in on a seasonal period and drive it higher? Or do we really see maybe the broader recessionary dynamics? I don't know the status of the earnings report, what the demand side was, but man, you go to Nike.com, a lot more sales than you normally see for them. You don't see their products in Raw stores really, or that, which shows we're not seeing a lot of that inventory flow yet. Maybe it's still a little bit early. Maybe last quarter was still good. I really want to see what the guidance is for Nike going forward. Could tell us the state of consumers. And boy, what does that translate in terms of eBay if people aren't selling their shoes? Can't sell them. No, I'm not sure we're quite there yet, but we might be getting close as eBay is rolling over today. Anyway, folks, it's been a pleasure being with you. Hope some of these trade ideas may ring for you and provide an opportunity for you.